Joining us is Jefferies chief market strategist David Zervos. A lot of hand-wringing over this issue, David. Is it justified?
I don't think so, Sarah. I think we all knew the debt ceiling story was going to be, a drama that came to a close as it did. It was posturing, positioning politics, and horse trading, and that's how it ended up. And I think the Treasury market knew that. The Treasury market prepared for that. We know there's going to be this onslaught of issuance. The Treasury tries to be predictable. I think they're going to do it in a predictable way, even though it has to be a little unpredictable because of the debt ceiling. But I mean, as much as it can be, this is priced into the marketplace. So I don't see a huge impact on the yield structure, particularly as we move out past the bills and into the 2-year and onward.
And as I understand it, it would only be a big issue if it all came from bank reserves, and it could also come from money markets. So that's not necessarily certain either. So what do you make around the repositioning here of the Fed? We always turn to you on monetary policy, and I know you have a new note on it today of this idea that they're going to pause in June, raise in July, and then what? Pause? What should we expect?
I think it was when we were on last time, Sarah, or I saw you speaking about it with other guests, this concept of a skip versus a pause, and whether that's more hawkish or less hawkish. I don't really know, but I do think the skip makes a lot of sense when thinking about it through the lens of the Federal Reserve. They've done a lot of heavy lifting. They've had a lot of success with disinflation. We're down from 9.1% in the headline CPI to 4.9% in 11 months. One of the fastest disinflationary periods in post-war history. I think they can rest easier, and if they need to, do another 25 in a future meeting, or another 25 and then another 25 at a future meeting in Q3 or Q4. I think they can do that, and I think they will retain all the credibility that they've maintained and possibly even enhanced since this inflation fight began.
So, David, by that you mean that in June, assuming that they don't move on rates, there's no need for them to necessarily heavily hint that they are poised to hike again in July. They can essentially just more or less leave it open-ended?
I think that would be the easiest thing for them to do, and I think they like that open-endedness. Watch the data, see how quickly the various inflation figures are coming down. You look at the PPI, it's come down really fast. CPI, a little bit slower. PCE, kind of in the middle, and I think they're gonna get a breather here, and the market's given them a lot of credibility, Mike. I mean, 1-year break evens from the Treasury inflation protected securities, the TIPS market, are at 1.9% last I looked. So the market's telling you that the break even inflation rate for the next year is less than 2%. I think the Fed can rest a little easy with that and watch it. Doesn't mean they're done. Doesn't mean they're not going to talk hawkishly. I think they will talk hawkishly, that their job is not done. But it gives them a chance for what I called in today's note a victory skip.
Yeah, Bank of Canada, though, went again after a skip. Australia went again after a skip. And now the odds are rising that they're going to go even more.
Yeah, look, the world is not as bad as the doomsayers would have us think, Sarah. There's lots of folks out there with big, nasty recessionary calls for the second half of the year. And they've been postponing it quarter by quarter. But the earnings keep coming out okay. Nominal growth's been very robust, which I think has been helpful for earnings, as we've talked about on the show a number of times. I'm not going to get too hot and bothered about a prognostication about a recession, no recession, soft landing, hard landing. We'll all have to wait and see what it does. But I think for the Fed's reaction function, which was what I sort of spend my time thinking about, I think they've got a pretty good case for stopping, thinking, being a little bit more prudent, and just take it a little easy on the economy. The mistake now is probably to go a little bit too far. They've done a good job getting inflation under control. They've got this supply-demand shock debate, I think, in their corner now. I don't see the rush, and they can come back and give us, just like Canada and Australia did, another 25 if it's not moving as quickly as they'd like.